time and joining us for this press conference for Cyient DLM Limited. We at Axis Capital are very proud to be associated with this company for this IPO. May I request, let me just try and introduce the management of the dais. To my extreme left is Srinivas Kulkarni, who is the CFO of Cyient DLM. To his right is Mr. Krishna Bodanapu, who is the Chairman and Non-Executive Director of Cyient DLM. To his right is Mr. Rajendra Velapudi, who is the Managing Director of Cyient DLM. Cyient DLM is actually one of the leading companies in the integrated electronic manufacturing services and solutions space, and is operating in various mission critical, safety critical solutions for its clients, which are top Fortune 500 clients in the world. The company has seen a very strong response towards its IPO through the meeting which we have organized with the investors. Just to give you a brief about the IPO and the summary. The IPO is going to be of 592 crores. We have already done a pre-IPO placement of 108 crores. The IPO opens on 27th of June, which is next Tuesday, and it closes on 30th of June, which is next Friday. And the price band is set as 250 rupees to 265 rupees per equity share. We and JM Financials are the opening lead managers for this IPO. To give you a brief and more details about the business, the opportunities, the industry landscape which the Cyient DLM management is operating in, the financials, the strategies which the company has, I would request the management to just come and take over from here. Thank you. Rajendra, you want to? Thanks.
Good morning, good afternoon to all of you. I think, as said by Ankur, so we are a company called Cyient DLM. So DLM stands for Design Led Manufacturing. So what that means is, whatever we design, we also just that finally leads into the manufacturing. That's what it's called as DLM, Cyient DLM. So what we do, we are an integrated electronics manufacturing solution provider. So where we provide a high complex, low to medium volume and high mix electronic products like PCB assemblies, wire harness and mechanical components. Okay, so the mechanical components, and then finally we integrate the final product at a system or subsystem level and ship it back to customers. So the products what we make, they are highly reliable and safety products, and they are also highly regulated industries where we work, like aerospace and defense, medical and industrial, and entry barriers are very high. So that, what it means is it's very difficult for any of the competition to come in so easily and enter into the area of the services what we are providing. And if you look at it, some of our marquee customers, so we have customers like Honeywell, Thales, Bharat Electronics. So we have the three major customers whom we have in the aerospace and defense. And we have ABB on the industrial side of that, and Malview is the medical customer. So where we are providing the services what I said earlier about the PCB assembly, cable harness and mechanical components, and doing the box build finally, the final product. And we also leverage one of the major strengths what we have is we leverage our Cyient Limited, which is our parent companies, the engineering team, the design team, where we have close around 8,000 plus people, where we take the support from that team for designing any of the products starting from the specifications. So that is one of the USP which we have currently, where no one really has in India in terms of doing this design to the end, finally making the end-to-end product lifecycle. We have 3 factories in India. So the one in Hyderabad and Mysore. So both are electronics manufacturing. When I say electronics manufacturing, they are the PCB assemblies and wire harness, then finally integrating everything into a box build. So both the locations has the same capacity. They can do, they can do the same capabilities. So they can do all the industries. They can serve from both Hyderabad and Mysore. We also have one more manufacturing facility in Bangalore. Predominantly that is for doing the high precision, low volume mechanical components. So these are the 3 factories which we have today in India. And if you look at our financials, what is there here is close for FY23, which is the March for this year ended, we are 832 crores and close to 11% of the EBITDA margins which we have. And also the free cash flow is close to around 44 crores. And as I said, we are, if you look at it, who is the competition? Probably not that we are working with any of the Indian EMS operators or competitor. Okay, so basically all our competition, majorly our competition comes from outside India. And it's already I just given an overview about B2P, which is build to print. When we say build to print, it is predominantly where customer provides the drawings, then we manufacture the product based on the customer given bill of materials and the drawings. That's what the blueprint is, the build to print, where we take ownership for procuring the components and for doing the manufacturing and assembling the product and shipping it back to them. And when we come to the build to spec, it is B2S we call it, where we take the complete ownership of doing the design with the support of our parent organization. We do the design and then we finally do the complete thing, manufacturing and shipping it back. So that's what the difference between build to print and the build to spec. I already mentioned the products and some of the PCB assemblies we make for aerospace and defense. If you look at it, we make a lot of subsystems for avian cockpit avionics, which we are working with today for one of our customers, Honeywell. We make the cockpit avionics, brand new cockpit avionics in one of their urban air mobility vehicles. Okay, so those are the things which we make it, and some of the RF circuit boards, TR cards, IO modules. There are some of the PCB assemblies which we make it. Then cable harness, I think there are different types of cable harness which goes into various industries where we manufacture those things, assemble that into the final product, and again ship it back to the customer. Same thing box build, whether it is aerospace, medical, or industrial. I think for any of them we will have either mechanical component or sheet metal or plastics. So where we will bring all those things and integrate it as a complete box build and give it back to our customers as a final product. And here I think probably if you look at the revenues, what we have, which talks about the revenues for aerospace and defense, close to around 58% of the revenues for the last year, FY23, coming from aerospace and defense, and then industrial is 25%, followed by the medical, which is 16%. I think the rest of the things I just walked you here. And also if you look at it, why we see the biggest opportunity for us right now in India is the global EMS industry. If you look at it, it is close to $3 trillion of industry which we have right now, where in the next 3 years, that's what we are seeing is going to touch the $3.168 trillion. And the most interesting thing here is to look at the A&D, medical and industrial. I think close to around 6 to 6.5% compounded annual growth rates is what we are seeing it currently. So that is the opportunity which we have it. And if you see the one on the right hand side pie chart, which talks about India currently has only 2.2% of the market share right now. After the close to $880 billion where EMS industry is there, leaving the in-house where our customers have their own facilities, leaving the outsourcing whatever has happened last year, $880 billion, we have only 2.2. Now that's what the industry expert analyst says that it probably go and touch down close to around 7% in the next 3 years. That is the opportunity. So that's what we are looking. And there are also a lot of factors which are driving the growth. And we are working towards that to ensure that we'll get a better share of this EMS business in India. And this again, just if you go and look into further this thing drill down, is only for India, how much is coming into India, okay, and how much is currently we are doing it. And the most important again here is for you to look at it is on the chart which is there on the bottom, right hand side bottom. So A&D medical industrial, it talks about close to 38 to 40% CAGR. So that's the biggest opportunity where we are banking right now to grow in those areas. Okay. I think why industrial science DLM, and probably just touch base with you. So we are not only doing only as per the print, and we do the design, build and maintain. That's what our industry to our customers. Okay. That's where I think there are not many people today available globally who does the complete end-to-end EMS solutions to the customers. And second, as I said, what we do is very reliable, safety critical okay, and highly regulated industries. That is one of the field where we are today. It is very difficult for some of us to come and enter into those areas. And if you also look at our order book, which is there on the top, close to around 2,400 crores of the order book what we have right now. That itself talks about how well we are positioned, and also the long-term relationships what we have with our customers. Okay, and also I think I just mentioned about the 3 modern facilities we have today in India. So I think we still have the capacity available. So we need not invest any of the new factories for the next 3 years. Whatever we have today, we can take it up to 3x of the revenues what we have done for the last year. So that is another strong thing which we have, the credibility and the industry. And the revenues I already mentioned here, so just skip that. Probably here I think we have the board of directors. I just probably request Krishna to just comment on the board and also on the management team.
Thanks, Rajendra, and I'll just quickly comment on the board. If you look at the board that we've put together, it is a very high quality board and management team. We believe that that's one of the differentiators because that helps us run the company a lot more effectively. And I don't think any EMS company in India is the same caliber.
I request you all to take the view on very carefully. But these are just some highlights. We closed the year FY23 with 832 crores revenue, which was a 15% growth year-on-year for us. What you can see on the right side is the improvement in the margins. I think we have consistently strived for getting better quality revenue, and that reflects in the margins that we have. Right? The gross margins have improved from, in fact, we do not have FY20 numbers here, but substantially improved from FY20, right, to about 15.5%, and we see that further improving going forward. More importantly, EBITDA is also improving from 7.32% to about 11.5%. It was a little bit lower in FY23 because of some of the investments we have made. So I think the management team that Krishna just referred to, right, and the sales focus that we have put in place means that we have invested quite a bit in SG&A. Now that benefit will come as the business starts growing, right? And then, of course, we have very strong order book. Right now, the order book is doubled from where we were last year, right? And this order book is executable over 24 to 30 months. So that's sort of gives you an indication of the trajectory of growth that we are expecting from this business. In terms of outlook, I think some of the objects of the issues are very clearly stated in the prospectus, but I'll just repeat. We plan to use the proceeds from the IPO to largely fund the working capital. So when the growth is going to be this much, the working capital consumption is also going to be very high. We have some external debt in the books. We will pay that off. It's an era of high interest rates. The financing costs are quite high today, so we are better off paying those interest rates. And then we have earmarked some money for general corporate purposes and some inorganic as well. And what we mean by inorganic here is, while the capacity is there for us, we want to invest in new capabilities. Right? I think there are opportunities for us to expand outside of India and be close to the customer proximity centers, and that's where the inorganic will come into. And then, of course, strengthening the supply chain, right, and also enhancing the further capabilities to sort of go to market, etc. So that's pretty much summarizing the value proposition. We will pause the presentation here and then take any questions.
Why taking so long to come to the market?
No, so Cyient, there's two companies here. One is Cyient, which is a technology services IT company, and we are obviously publicly listed. Now, Cyient primarily does a lot of work on design. So we work with aerospace, rail, those kind of industries and design. So the natural sort of vertical integration for that was manufacturing. That's why we bought a company that was doing manufacturing in these industries about 7 years ago. So Cyient DLM, which used to be called Rs592 Electronics till we bought them and renamed them, has been also in business for about 30 years, about the same time. So we ran Rs592 as a subsidiary of Cyient for the last 7 years as Cyient DLM, first as Rs592 Electronics and then as Cyient DLM. But the idea now is that electronics and services are electronics manufacturing and services are very different kind of industry, so it makes more sense to have this as an independent company. There's also very strong growth opportunities because of where electronics is and manufacturing is in India. So for this business to grow, we need to give it an independent structure, and that's why we are listing it out at this point.
So you are only 7 years late.
We're not necessarily 7 years late because electronic manufacturing in India has only been really coming into a good situation maybe 2-3 years ago. So I would say we're probably just about on time because see what will happen is if you look at even our business, the growth was for the last 7 years has not been great just because that's the market and that's the demand. But over the last 2.5 years, the demand has increased significantly.